Good morning and thank you for tuning into your come up. Today we're going to have a conversation here with Daniel Algazi. Just want to give you guys a quick disclaimer. We are not professionals. We're just two millennials on YouTube. Just take this video as educational purposes. With that being said, we'll get right to it. Good morning, man. How you doing today?
Morning. How's it going?
Pretty good, man. Thank you. Daniel, back when I was in college in 2006, I had a job, part-time job, and I was always told to set aside at least $100 a month in an account, Roth, index funds, whatever. And I wish I would have did that. If I would have set aside $100 in an S&P 500 index account back in 2006, that's probably what, $16,800 invested. I would have had over $57,000 today just with that $100 a month. In your opinion, once again, we're just two dudes on the internet drinking coffee. Cheers. What would you do with $100 a month to invest?
Well, I've been investing for a long time. Since we were in high school, I've been investing. Throughout time, I've thrown money in the stock market, invested in different companies, and yeah, it's a really good idea. Even if you don't even have 100, there's new accounts called like Robinhood accounts where you can do partial investments and buy partial stocks. Yeah. Examples would be if you had bought Tesla, you're talking about S&P 500, but if you were to pick a company like Tesla and you put $100 in Tesla in 2000, you probably retired right now.
Or soon.
So, no, and putting money in the stock market is always a really good idea. There's a bunch of different things you can do. Something that's really popular nowadays is options. If you're interested in options and trading stocks like that, we can always go into in depth, and I can show you how to trade different options and do different put calls and make some money that way. Okay. But any type of investment is a really good idea. Right. Basically, $100. There's books that that talk about investing, and if you put $100 out of your paycheck, or 10% of your paycheck, usually is what it is. Right. You basically, by the time you're 60, you can retire and live a lavish lifestyle that you want to used to. Okay. But yeah, no, stocks right now, stocks have a trend of going up and down, up and down. In 2000, there was the dot-com crash. So people that don't know a lot about stocks, back in 2000, we had a huge shoot up in stocks. Kind of like what we're having right now.
Exactly.
And then it crashed back down. In 2008, we had an increase all the way to 2008, and then we had the housing market crash, and then went back down. And then today, we're at an all-time record high. Right. So it's constantly going up. So as long as you pick a good stock that you think the company is going to be around for your lifetime, like Walmart or Starbucks or
Coca-Cola.
Yeah, Coca-Cola. Yeah. Stocks like that, it's always good to put 10% of your revenue or income into the stock market, and you wouldn't have to worry about your future.
I only start with $100 a month because 10% is a rule. They say pay yourself first, and that's before you spend any of your money, whatever that income is. Take 10% of it, just pretend it's not even there, and put that in an investment vehicle. $100 is a good start, and then once you get started investing, it's kind of addicting, and you just kind of grow and you learn about different stocks and bonds. I personally use Charles Schwab as my brokerage account because you can invest in the S&P 500, Standard & Poor's 500 for as little as $1. If you guys want to know more about topics of investing, comment below, let us know. We'll go more in depth with it.
We'll have a different video that talks specifically about those categories.
Exactly.
And any questions, and we'll meet up again and have a conversation.
Yeah, coffee and a couple millennials on the internet. Thank you guys for watching. Today's video was sponsored by Yapix Web Design and Graphics. And until next time.